Well, I hope everybody had a wonderful Easter weekend. I can usually tell by looking at your face you either did or you didn't, or it was too busy, not busy enough, whatever it was, gee whiz. Anyway, what I want to talk about this morning has to do with credit. Because credit has obviously become a big, big deal. It's always been a big deal in our business, but lately it's been even bigger because there's more people that want to get into the house purchase side of things, because when they go to rent, they're finding rents are going up so fast they can't afford it. Or they're looking at it thinking, wait a minute, once if I have to pay $1,600, $1,700, $1,800 or $2,500 a month for rent, I may as well try to buy a house. And the reason they haven't bought a house before is because their credit wasn't good enough. And they were able to squeak themselves into a rental situation as opposed to trying to buy a house. And now they're looking at it and saying, I got to do something different. Now, question for all of you. If you have somebody who has credit issues, how willing are they to talk about it? With you or with someone else?
Not very.
You're shaking your head, not really. Borrell's shaking his head, not really. We already know they don't want to. All right, so how do you get people that know that they've got credit issues to be willing to talk about their credit issues? How do you do it? What do you do? Tell me. I'm curious. What do you say that works? What have you said that hasn't worked? I'm curious.
I was going to tell them, if there are issues, it's better to know about them early so that we can get you on track to repair it and be in a good position. But hiding it's not going to help anything. It's just going to keep us from ever getting one.
Okay. Anybody else? What have you said that has worked? What have you said that has not worked?
Everything I've said hasn't worked.
Everything you've said hasn't worked. What type of things have you said? I'm curious.
Well, I mean, it was to the mayor's point, just understanding where you are. Like, I understand you probably can't get what you want right now, but it's best to know and work on it now so that when that time comes up again, you'll be ready. But once we have that conversation and then you either get in with a credit person and they just kind of go close.
So let's talk about this. So why do you think it is that people who've got credit issues are hesitant to talk about it? Why?
Maybe they feel like they're going to waste your time.
They feel you're going to waste your time. Good point. What else?
Maybe.
What's that?
Some embarrassment, maybe.
They're too embarrassed. That's the number one reason why people don't want to do it. They're too embarrassed to do it. They don't want to. So if you think about it, the job we have when we're dealing with someone who's got credit issues, or they feel they have credit issues, how do we get them to be willing to talk to somebody about those credit issues? The issue we have to overcome, the number one issue we have to overcome, is the embarrassment factor. That's the number one issue. So if somebody's embarrassed about something, how do you move them away from that feeling of embarrassment? What's that?
If she said normalize it, I was going to say maybe share your own personal experience or make something up.
God, I love that. Share your own personal experience. Somebody else. How do you move them away from, they're not going to change it, they're not going to feel embarrassed, but how do you make that less of a fear and more accepting? What would you do? Because you're dealing with embarrassment here. What would you do?
Hope. Just let them know, hey, I deal with people every day that are dealing with this. There's a track that's going to get you, where you want to be.
Okay. Related to other people. Okay. So personal experience, relate to other people. Anybody else? All right. Couple of things that we can do. First of all, every time I'm dealing with any issue that is a potential objection of some kind, I always view it as a defense barrier. I always just look at it and say, okay, Jay and I are working on something, and I can tell Jay doesn't want to talk about it. That's like this big barrier between me and Jay. So how am I going to move that barrier down so that Jay is willing to talk to me? And maybe, just maybe, we get in a point of where we can actually collaborate on something. How do I bring the defenses down? And I personally think one of the strongest things we can do, as always mentioned, is personal experience. Because when somebody hears that you've had a similar experience, and it's not just that you've had a similar experience, but that you can relate without, they're not going to say they're embarrassed, but when you can relate to them and say, I have to tell you something. You're probably a lot better at this than I am. But you know what? When I was going through my credit issues, it was the most embarrassing thing I had to deal with. And it was hard for me to overcome that. Now, you may not have that issue, but I did. And it took a lot for me to move off of that. Well, what I just did there, if I'm having that conversation, I didn't drop the barrier down all the way, but it lowered a little bit. Why? Because I didn't accuse them of being embarrassed. I told them I was embarrassed when I was in that situation. And then I can relate to them either personal experience or through other experiences. How do you manage that? How did we get through that? How did someone else get through that same situation? And then the last part of that is moving them into the dream they have. You know, there's the two greatest fears in the world. What are they? Two greatest things that motivate people, I should say, in the world. There's only two. Love and fear. That's the two things that motivate us. That's it. Love and fear. I've got to get them away from being so fearful of doing what they want to do because they're afraid. That fear will not let them move. So what I've got to do is help remove that barrier. And then the second part of that is, what's their dream? Have you thought about the house? If I can get somebody in that situation to talk about what they want, I'm going to be a lot further ahead because now they're thinking, I want this, I want this, I want this. Well, potentially we can get you there. Now, it won't be easy, because it's not, but there might be a way to move to that point. But, you may not have the problem that I did, but I was struggling with the fact that I just didn't want to do it. I was afraid to talk to somebody about it. I thought I should try to do it myself. And I went online and did all these things here, and they just didn't work. And it wasn't until I got to a point where I just wanted this so badly that I took a chance. You may not have that problem. And what have you done? You've just related to them so that they'll move closer to you. Because here's the thing that happens. There's 3 different kinds of credit issues that you and I are going to deal with. We're going to deal with credit issues for somebody who's got good credit and doesn't even know that they've got issues on their credit. Doesn't even know it. That's an easy one. Because usually they have so much confidence in themselves. We might even call the word a little bit of arrogance. But they're so confident that they'll just, they're kind of shocked that they don't, they didn't even know they had an issue. So that one's easy. But then you've got the next 2. You get somebody who's got some issues and probably can be worked out if they're looked at and if they're counseled properly. And then you've got the third one. Third one says, I need professional help. I mean, you don't need a Greg. You need somebody who does credit improvement for a living to help you get out of this mess. And this could take 1 or 2 years to get out of. But if you don't start today, you'll never get out of it. Yes?
Is there a range you put on each of those as far as the actual number?
No. Good question. Is there a range? No, it's not a range. It's really what you're dealing with. I'll give you an example. Mike Mintier and I were working with this lady since last fall. And when I looked at her credit last fall, it was I think hers were like in the 570s. And she was like, she had to buy something, has to buy something, has to buy something. She hasn't bought yet, but she's getting closer. but her credit scores are now up over 640, and probably when we rerun them next month, they'll probably be up to somewhere 660, maybe even 670. Now, that is one where when I look at the report, I know that if she does 1, 2, 3, 4, her scores are going to go up. No question. Because I can look at it and say, you've got this and this and this, you can take care of that. And I wish I could give you something more specific, but I can say she's got a couple of collections that are somewhat recent. They're not going to come off the report, but if you can get them to 0, they're going to make an improvement. We got to get you a credit card, one credit card, or you got to pay down some of your credit cards, whatever it happens to be. If I see stuff like that, we can advise them. If they do it, scores will go up. I mean, I have 3 situations that are closing in the month of April where when we ran the credit either in February or in March, where the scores were lower, and when I looked at the report, I was able to tell the client, hey, do this. We'll run the report next month, the score is going to go up and you'll get an improvement and you'll get a better rate. And even though we had the rate already locked, they get a little bit better as soon as it improves. Those are simple ones. Okay, that's what I'm referring to. Now, then you've got the situation where you've got the person that has just severity. I mean, they've got tons of collections. They have a car repossession. They've got a bankruptcy, and they've got derogatory credit after the bankruptcy. That person needs professional help. Now, I've been working with the same company, a place called out of Colorado called Continental Credit. Same gentleman, his name's Sebastian, for 9 years. I refer people up to him, and I probably refer him at least 2 or 3 a month. So maybe somewhere between 20 to 36 people a year that I'll refer up there. How many people do you think actually end up going to work with him?
5.
Not even. Less than 10% of the people that I'll refer up to him will actually get in touch and work with him. The interesting thing is, everybody who does, at some point in the future, ends up buying a house because they can. So what's the difference? If the success rate is almost 100%, if you go to work with somebody like that, why wouldn't the other 90% do it? Thoughts?
Maybe they have to pay for the other service.
Yeah, they have to pay for the service. Mm-hmm.
Yeah, so that's where, from the credit guy that I know, he said that's where it always falls off. They start talking about price and everything, and then they just
Okay.
move it away.
Jay?
I think even more so than that is there are so many credit repair scams that people don't really believe in those.
That it can work. Okay. Anybody else?
Some people are aware of their situation and feel like it's so insurmountable, they just don't have the funds to handle it.
Okay.
It really doesn't matter what.
They just don't have the funds. They think it's too insurmountable. They'll never get out of it.
Yeah.
Okay. Anybody else? Just in my experience, the reason, not all 100% of that 90%, but the majority of those people in that 90% that won't make the call is because that's why they're in the situation to begin with. There's no motivation to fix it. They want something called a quick fix, which isn't going to happen. They've got to dig in. They're going to have to sacrifice. They're going to have to make massive changes in their lifestyle, massive changes in the way that they view what they're going to be able to do in their life. And guess what? They don't want to do it. As a result, guess what? They're not going to pick up the phone and call Sebastian. And Worrell, yes, maybe they get freaked out with the money. Think about this. Sebastian's company charges a one-time fee up front of $79. There is no contract. It's month to month. Then they charge $79 a month. Every single client that I've referred over there has saved well over $79 on getting collections paid off that that they just discounted or they eliminated. So the $79 a month is nothing. It's less than $1,000 a year. If they can save you on those collections or on some of the other debt, if they can just get that wiped off to the point of just $1,000, you've come out ahead. The problem, in my opinion, of what I've witnessed is that people are in the situation to begin with. That's why they're going to stay in the situation. Except for that 10% who really got into a bad situation and they've got the motivation to get themselves out. The trick is, how do you and I get them to talk either to me, to another loan officer who they can trust, or to somebody like a Sebastian? How do we do that? And I go back to what we started this conversation with. I got to take down the barriers by relating to them something that's personal with me, or by this is what's happened to someone else. And if I can relate that situation, we can move forward. How many times do you get the chance to talk to people that say to you, hey, you know what, I don't want to go the pre-approval yet because I really don't want to get my credit check yet. You know, we're a few months away. Do you get people that say that? All right, everybody's nodding their head. Of course you do. We all do. But you know what? Those people have got to get their credit run today. Anybody know how many points it's going to affect them if a mortgage company runs their credit? How much?
2 or 3 points. 2 or 3 points.
2 or 3 points. 2 to 5 points. That's it. That's it. 2 to 5 points, because we're not giving them credit. All we're doing is inquiring. 2 to 5 points, all it's going to affect them. But if you tell them that, they don't want to hear it. So what do I do? Something that what Lanier says, because I know we got to get them, we got to just take a look. Some of you have heard me talk about when I talk about credit, I talk about skeletons. Skeletons are those things that exist in our profile that we don't even know exist. I have a client that I've done in 2020, 2021, and 2022. I've done 4 mortgages for this gentleman. And when he got remarried earlier at the end of last year, they decided they're going to buy a new house this year. Now, I've done all his mortgages, and I know everything about his profile. And he said to me, he said, Greg, you don't have to, don't worry about it. We'll just wait until time. I says, his name's Steve. I said, Steve, no. Let's do it now. Let's make sure there's not a problem. He's always had close to 800 credit scores. So he's going to go buy this house, and big house, and he said, and I go run his credit, 698. I call him up. I said, are you sitting down? He says, what's wrong? He said, you're not going to believe this. He said, what? I said, your middle credit score is 698. He goes, that's impossible. There's no possible way. I said, did you know that last month a collection agency put a medical collection on your report for $59? What? He said, that doesn't even make any sense. I said, it's a month old, and it's an unpaid collection. So I don't know how long it's been in the works, but it's an unpaid collection. Greg, that's ridiculous. I said, look, don't shoot the messenger. That's why I said, let's get this done now. What do I have to do? What do I have to do? You got to do the following things. And he did those. And by the time we closed, which was in March, by the time we closed, the score went up to just over 760. So those things can get fixed, but you can't wait until you're 30 days out from trying to close and then all of a sudden start working on your credit or working on something that you don't even know about. That's a skeleton. And I'll relate skeleton stories so that somebody says, hey, I don't want to have a skeleton. And someone else mentioned it when they said it doesn't cost anything to do this, and you're right, it doesn't cost anything to have me or another lender, pull this together for you and take a look at it. But that's what we've got to do. Because if we don't, then what's going to happen is you're going to write a contract. Lanier's going to write a contract, and Greg's going to run the credit, or somebody else is going to run the credit, and there's going to be this ding on there, and they're not going to like it. And they're going to get very upset, especially when their interest rate's a quarter higher than it should be, especially in today's market. So to summarize this, we got three categories of people. We got those people who know that they've got good credit and something came up and we got to fix it and we can fix it pretty quickly. You've got those people who've got issues on credit, could be in the 500s or low 600s or even mid 600s. You want to pull them up, but the lender has the capability of knowing what to do, how to do it, and can advise them. The third case is the one that needs true professional help. But especially in those last two cases, we have to find a way to take down the barriers. The two best ways I have found, bear in mind, we're dealing with embarrassment more than anything else, is to use personal examples or examples of other people so that we can take the barriers down and help move them toward saying, you know what, okay, I'll talk to Greg. I'll talk to him. And then if we can get a conversation going, collaborate a little bit, it's amazing how people will come around. And just so that you know, I don't have a 100% score on this either. Sometimes people will just say, there's no way I am doing that. Or they'll say, let me think about it. That's the greatest line in the world. Let me think about it. Okay, go ahead, think about it. Do whatever you want to do. What's that?
Talk to my wife.
Let me talk to my wife. Jay?
How many years on bankruptcy, and is it different for FHA and conventional?
Okay, how many years on bankruptcy is it different? Yes, it is. You got to be out of a bankruptcy a couple of years for FHA and 4 years for conventional. Discharge date, okay? The actual discharge date. That's the key. That's the key. Now, you'll talk to some lenders and they'll say, well, wait a minute, you can actually do conventional after 2 years. Well, technically you can, but that's a problem because you have to have what they call extenuating circumstances. And in all my years, I've never had a case where I've been able to convince underwriting that this is extenuating circumstances. It's very difficult to make that connection. But minimum 4 years out.
How long would it take for that, the hit for pulling credit to fall off?
120 days.
Okay.
The inquiries show up for 120 days on your credit report. After that, they drop off. You won't see them anymore.
Isn't it also true that multiple pulls for different mortgage lenders doesn't affect it more than the first one?
As long as it's done, Jay, that's a good question. Multiple pulls from a mortgage lender, as long as it's inside of a 30-day window. If it's outside of a 30-day window, scores will come down. In fact, it's interesting. It's someone in this office, I don't know who it was, I'm doing a loan for somebody, and they had inquiries in December, in February, and in March. And they called me last week. And they were surprised to see that their scores going. I said, well, the problem is you got these mortgage companies all at different times. Why? And I asked them, why are you talking to all of these mortgage companies? What are they not telling you that's making you feel good? And as you might expect, nothing. They're Googling things, and Google tells them that they should talk to as many people as they possibly can, which is the biggest joke in the world. You know, you don't do that for your pre-approval. You do that when you're shopping rates, not your pre-approval. So, and we'll do that another time.
2.8% interest rate, Greg.
What's that?
They want that 2.8% interest rate.
Yeah, they want the 2.8% interest rate, exactly. By the way, I don't know if anybody saw it, but this morning, Market Watch had a flash and said that the interest rates now have now, in fact, reached the highest they've been in a decade. We had October through December of 2018 that matched where we were at last week. We're now the highest in the last decade. That's straight from Fannie Mae and Freddie Mac. It's just not seemingly easing up, which I don't think that'll stay that way, but it is for now. All right? All right, thanks everybody.